So before we get down to China-U.S. relations, I have to ask about inflation because we're now at the tipping point that the U.S. is pivoting its policies, which could send ripples across the world economy. So, Professor Summers, you correctly warned of U.S. macroeconomic policies leading to the inflation very early. Now, what is your assessment of the situation?
I think we've got real inflation risks in the United States. We have a very strong economy. We have a record level of job vacancies. Workers are leaving firms at very rapid rates to seek opportunities elsewhere. Labor shortages seem pervasive. And at the same time, we've got a relatively rapid underlying rate of inflation, with the CPI up 6.8% over the last year. At the same time, we have extraordinarily easy monetary policy with real interest rates looking extremely low over almost every horizon. So I think barring some policy adjustment, we're in real danger of having accelerating inflation. The challenge for policy will be to moderate inflation without doing damage to the rate of economic growth, without inducing a recession. And that's going to be a very difficult and delicate balancing act, especially in light of the fact that asset prices are at very, very high levels at this point. This is a consequence of the tremendous level of stimulus that we infused into the economy last year, even as the process of recovery was beginning.
What's the chance do you see for a recession?
I think the chances are that we'll avoid recession this year, but I think that's a very, very strong chance. But I think the chance is perhaps 40% of a recession beginning sometime over the next 2 years.